Howdy folks, my name is Ben Brown. I work in the College of Food, Agriculture, and Environmental Sciences at The Ohio State University, and this is my market outlook for the week of May 8th, 2020. For those of you that have heard me talk live across the state, you know that I like to start my market outlooks with corn, and then we move to soybeans. This does not mean that corn is superior to soybeans, it just simply means that corn comes first in the alphabet. However, I have a problem. I talk too much, and I tell too many stories, and therefore we either have to rush through the soybean balance sheet or we don't get to it at all. So in anticipation of the upcoming World Ag Outlook Board's first iteration of the 2020-2021 corn and soybean demand and supply estimates, I thought it'd be important to talk about the soybean balance sheet and what we expect for the new crop coming ahead. We've talked about different parts of the soybean balance sheet in recent weekly outlook videos. It was 3 weeks ago that we talked about the outstanding soybean crush numbers we saw from the National Oilseed Processors Association when they reported 181 million bushels of soybeans processed for the month, which was 6 million bushels more than any other month. But we laid out expectations for soybean crush through the remainder of the marketing year. And then it was 2 weeks ago that we talked about planting intentions for both new crop corn and soybeans, with the potential for corn acres to shift to soybean acres here in the eastern Corn Belt. However, that leaves one big part of the soybean balance sheet left, and that's soybean exports for both old crop and new crop soybeans. It is widely known that about half of our soybeans produced here in the United States get exported, and of that, China is the biggest buyer of U.S. and world soybeans. So that United States-Chinese relationship becomes very important. It's something that we've learned and witnessed over the last 2 years. However, there did seem to be some type of resolution in January when the United States and China entered into a Phase 1 deal where China committed to buy significant amounts of U.S. ag and ag products. Most people thought we'd see large increases in U.S. soybean purchases by the Chinese. However, that hasn't really materialized over the last couple months due to COVID-19, the strong South American crop, primarily in Brazil, a new record, and then, as we've mentioned before, currency exchanges where the Brazilian real has fallen roughly 33% to the US dollar since the beginning of the year. These all create headwinds for US exports in the short term, and we've seen that. And the graph I'm showing you here represents soybean commitment, so these are exports and then new sales that have not yet been exported in the red bars for the current marketing year, and then the black dotted lines represent 2018-2019. And then the gray bars represent our seasonal pace that we need to match to meet USDA's current estimate. And as you can see, there's been a big gap between our current exports and sales and where we need to be to meet USDA's current estimate. This is important given that in April, at the beginning of the month, USDA lowered soybean exports 50 million bushels to 1.775 billion bushels. But at our current pace, we've only committed 1.5 or 4.5 billion bushels, representing about 82% of what we need to be to reach USDA's estimate. We normally export and sell a lot of soybeans during the first half of the marketing year when Brazil becomes the primary supplier to the world in the back half of the marketing year. Over the next 17 weeks, we need to average roughly 28 million bushels of soybean exports a week. The previous 3 weeks, we've averaged 19 million bushels, with the most recent week as of Thursday, May 7th, in the neighborhood of 16 million bushels. So we've got some work to do. We need to pick up both exports and then sales to reach USDA's current commitment. I think it is reasonable to expect that China will buy a significant amount of soybeans in the back half of the marketing year when Brazil starts to run low and we start to see U.S. soybeans become available. I think we still could potentially see another revision downward, either in the May WASDE that's coming up or in future months, in the neighborhood of anywhere between 100 and 150 million bushels. Let's pull this together into balance sheets for both old crop and new crop soybeans. I've got the old crop soybeans as they were reported in the April WASDE report there in the first column. I didn't make any adjustments to the supply numbers from the 2019 crop as I don't think it's justified, and I don't think USDA is going to make any adjustments either here in May, but I have made a couple of adjustments to the demand side of the equation. I increased domestic soybean crush 10 million bushels, again related to those strong soybean crush reports that we've seen the last couple of months, and then my expectations for soybean crush through the remainder of the marketing year. And then for soybean exports, I've dropped our current marketing year's expectations for soybean exports 100 million bushels. Given that we're 225 million bushels below the pace we need in terms of exports and sales commitments through the remainder of the marketing year to meet USDA's current estimate, you might be surprised to see me only dropping at 100 million bushels. That's largely due to the fact that I think we could see China buy amounts of soybeans later in the marketing year that help catch us somewhat back up. This would come in July and August. The question becomes, do those get counted in the current marketing year or in the next marketing year? And I think it's a mixture of both. Something promising for me, and that's been, I think a good sign for U.S. soybean producers is that with all this talk from the United States and other countries around the globe about holding China accountable for what they did know and what they didn't disclose related to COVID-19, that hasn't seemed to impact U.S. soybean sales to China the last couple of days, and so I think that is promising, and I think we will see increased soybean sales later in the marketing year to China. The question becomes, when do they come and what marketing year do they show up in? But I've got it reduced 100 million bushels here in the current marketing year, but that increases our ending stocks to 570 million bushels. Now I am on the high end of estimates for the May WASDE report. The average estimate by market analysts is 488 million bushels for the May WASDE, and I'm at 570. But again, I've made my adjustment to exports. If USDA doesn't make an adjustment to exports, that tells me that they have reason to believe that China's going to buy soybeans later in the marketing year, and that's going to come into this picture. But I just don't see it to that extent, and so I think we will eventually, sometime between now and the end of the marketing year, reduce exports 100 million bushels, even to 150 million bushels for that matter. So I've increased ending stocks to 570. That's within the range, but again, I'm on the high end of the range. Those then get carried into beginning stocks for the new marketing year. And when we start looking at production for our new marketing year, I expect USDA to use their planting intentions number at 83.5 million acres, a trend-adjusted yield of 50.5 bushels to the acre, which is, again, a trend-adjusted yield. We haven't seen any major changes or deviations in planting progress that would justify a change in yield yet. So I expect that 50.5 bushels to the acre to be used. That gets us just under 4.2 billion bushels of production for the year, plus that higher carry-in that I'm expecting. And we're looking at close to 4.75 billion bushels of soybean supply for our new marketing year. When we look at the demand side, again, I'm expecting strong crush next year, but not as strong of an increase year over year as what we saw this year. Again, when we look at 2019-2020, out of the 7 months we have records for, 4 of the 7 months have broken a new soybean crush record. That's been driven largely by large crush margins for processors, and I'm just not expecting that next year, so I don't expect processors to push that envelope as hard. Then the question becomes, what does exports look like for next year? And I've got exports just under 2 billion bushels for the United States. Again, this is highly dependent on the U.S.-Chinese trading relationship. If we don't have a strong exports to China, we're looking at exports very similar to what we do this year, what we had last year. As China continues to recover from African swine fever. Lately, there's been reports of African swine fever popping up again in China, signaling that the demand destruction is still continuing over there and reducing the need for soybeans. But they have been buying soybeans at cheaper prices. So I've got it just under 2 billion bushels, a total use for the year just under 4.2 billion bushels, and an ending stocks value at 556 million bushels. That's 13.3% stocks to use, and I'm expecting an average cash price, season average cash price of $8.50. Now here in the Eastern Corn Belt, we've seen relatively strong harvest price soybean basis to this point. We're about 25 to 30 cents stronger in harvest price basis at this point. So I've talked to producers about basis contracts and forward contracts to pick up that strong basis. If we have a record crop and we continue to struggle with exports, which is represented there in my bearish category, and we're looking at a season average cash price of $7.85, we're going to see that basis widen as processors are going to send that signal to producers and elevators. Elevators and processors are going to signal that economic signal to producers to hold that in storage on farm and not bring that to market. and I think we're going to see that basis widen. So the basis right now of a relatively strong 25 to 30 cent a stronger basis than what we normally see is something to keep an eye on. The only thing that really tightened that is we entered into a weather pattern again this year, which again I'm not predicting. It is possible, as some analysts are starting to look at the possibilities of an El Nino situation here in the United States, which would signal drier weather and maybe some potential yield shortfalls. That would encourage both futures prices and cash prices if we saw strengthening basis. But again, I'm not expecting that, and I think taking it, somewhat advantage of the strong basis that we're seeing right now is possible. Then my final column that I've got is related to my most bullish scenario, and this is something that I can make soybeans look a lot more bullish, or I can make soybeans bullish more easily than I can corn. Which is crazy to think about given how the last 2 years we've talked a lot about the demand destruction on soybeans and the trade issues we have in soybeans, and then just the large amount of soybeans we have on hand. But it is a lot easier to make soybeans bullish compared to corn this year. I am expecting a little bit of a return from corn acres into soybean acres, especially here in the eastern corn belt. Not a lot. I would put it somewhere between 84 to 84.5 million acres of soybeans. Here in the eastern corn belt, nationwide with that return here in the eastern corn belt. I'm expecting that soybean crush still around that 2.135 billion bushels. But if we have strong soybean exports, China is trying to fill their phase 1 commitments. It's an easy way to bring good favor with the U.S., build good relationships, and we see strength in that export number. We're looking at a relatively strong soybean picture. 437 million bushels at carryout. That's a 10% stocks to use ratio. We're looking at a $9 cash price in that case. That's that bullish scenario, but it could even be more than that, given that I've still got a 50.5 bushels to the acre yield in that column. If we have a dry weather pattern, we've got somewhere around a national average yield of 48 bushels the acre like we did this year. That soybean picture starts looking really tight, and we start seeing progress in the price potential for soybeans in the new crop year. Again, overall, right now the picture isn't overly bullish. We've still got soybeans. We're still expecting large amounts of soybeans and increased stocks next year from this year. At least those are my estimates. But soybeans could be made bullish relatively easy, but it's dependent on China and then the United States potentially reducing production for the year. And with that, I just want to thank you for joining me for my weekly outlook. Reminder that the USDA is going to be releasing their first estimates for the 2020-2021 marketing year on Tuesday, May 12th at noon Eastern Time. We expect several changes both on the corn and soybean demand side. I also want to remind you that the Farm Office team here at Ohio State will be having another Farm Office Live on Thursday, May 14th at 9 a.m. And you can use that link at goosu.edu/Farm Office Live to register for the event and get signed up. We'll be tackling the latest WASDE report there, as well as other hot topics in farm management, and I encourage you to join us. And then finally, if I can do anything for you, that my contact information's listed there. Don't be hesitant to reach out. And with that, I just want to thank you again for joining me, and I hope to see you around the state of Ohio soon. Thanks, and have a great day. Bye.